It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, tracking the latest moves, yes, in the Australian property market, and streaming right now on Spotify and Apple Podcasts. From Cairns to Hobart and from Perth to regional Australia, we have got the market covered for you. And the weekend, well, that is a distant memory, isn't it, on our Monday morning? But not if you fell in love with a property. Actually, falling in love with a property as you go about trying to secure it probably isn't a great idea. You need to approach it from an investor's point of view. That way, you won't get your heart broken if it all ends in tears. Yes, take the emotion out of getting into a property. That will work a lot better for you. As I mentioned, it is a Monday, April the 20th. Happy birthday if you're celebrating. Carmen Electra, are you old enough to remember who she is? She's celebrating a birthday today. She's turning 54. She became a pop culture star in the 1990s through her television and modelling. And also on this day, back in 1999, the Columbine High School massacre that occurred, which changed school security across the US, but it didn't stop these school shootings. They are continuing. Now, because the first quarter of the Australian real estate market is behind us, we have coming up on the Real Estate Breakfast this morning a look back on some of the interviews and talking points that helped shape the conversations for the start of our year. And the first quarter did show resilience despite affordability pressures and higher interest rates. Prices held firm in many capitals, with Brisbane, Perth and Adelaide continuing to outperform. Sydney and Melbourne, now they were steadier in the first quarter as borrowing limits weighed on demand. Regional markets, they remained active, and overall it was a market of momentum in some cities and caution in others. So let's go back and have a look at what was happening and what we were talking about. Affordable unit buying in Adelaide isn't just a go north story anymore.
100%. People are really focused on just finding a nice little suburb. I mean, if they can't get the house in the suburb they want, they're looking for a 2-bedroom unit. If they can't get the 2-bedroom unit, they're even open-minded enough now that they're looking at a 1-bedroom unit. The median's approximately 650,000 is what we're finding. And it really depends on whether it's a 2-bedroom or a 1-bedroom. There is a lot of that data skewed towards the old Transport SA building, which was converted from an office building into a residential complex. So they've got 1 bedroom, they've got studios, so that can influence the median sale price, depending on how many of those have sold in the area. But typically, you will find some of those 70s charming colonial style single level, which appeal to your downsizers more so.
High inflation hurts all Australians. The board now thinks it will take longer for inflation to return to target.
So a lot of people are hoping the Reserve Bank is one and done with the rate hikes. But should they be expecting the RBA to undo or reverse more of last year's rate cuts?
The board has taken a cautious approach. Now, I know this is not the news that Australians with mortgages want to hear, but it is the right thing for the economy. I do understand that for mortgage holders, this isn't a great outcome. Having said that, what's also not great for them or for anyone else is if inflation remains elevated.
And the Gold Coast is this standout location in places like Surfers Paradise, Main Beach and Benoa. House prices have jumped more than 330 grand in just 90 days.
Yeah, that's correct. The main reason for that at the moment is that, as we said before, people get up here, they envision their lifestyle here. And the great thing about those stretches as well, from Broadbeach to Burleigh, we have a lot of these small commercial centres that up and down the stretch of the highway through there.
Unfortunately, probably expect another rise in May. I think that some of the language that was being used by the governor and in the statement, it suggested that they very much got a watching brief on this, and their forecasts for inflation show that they expect it to get a little worse, I'm sad to say, a little higher before it gets better. I think we can take from that it's more likely than not that we probably will get another rate rise in May.
We get inquiry from families looking to move to Bali to have a sea change. We definitely seen an increase in inquiry from retirees who think it's much more affordable to live in Bali, especially from Perth and the west coast of Australia.
It's a big diff, though, isn't it? Big difference from talking about moving offshore and actually doing it.
Yeah, good question. I think a lot of people come to Bali for sometimes a long holiday, or those that have been coming here for many years in a row and start to dream of having a property in Bali. It's a nice dream, but I would say the conversion rate would be more like 10 to 20% of Aussies that actually go ahead and make the move or purchase that investment property.
If somebody's got 500,000 Aussie dollars and they want to get into an apartment living scenario in Bali, is it achievable?
Yeah, most definitely 500,000. There's not a huge apartment market in Bali. It's still mostly dominated by villas, but you can find, say, one-bedroom apartments now starting from around 250 Aussie, and 500,000 Aussie will certainly get you a nice 2 or 3 bedroom villa.
Oh, that's good. So you're the right person to ask that question. So let's get the lens on for the next 12 months.
I think looking at the different price points, anything that's 750 to 850K, which is really the sweet spot for first home buyers, their lending options cap out for the 5% lending option caps out at 850K. So we're really finding that that's the ceiling on where they're going to. That segment of the market, I think, is going to have 10 to 15% of growth further. Then the sub sort of 750, that's still very active. It's probably going to have more 10% growth.
We know that Canberra over recent years has seen lots of high-rise developments occur. That in itself can help change a price point. But I think that supply of apartments and units has really helped to cap the rate of price growth. And we're now seeing them fall over the course. It was a minor fall. It was only 1.3%. But as you mentioned, it was the only capital city to record a quarterly decline in unit prices. So it does show that Canberra is kind of bucking the trend nationally.
So you have moved from Canberra to Sydney, and that's where we are headed off to right now, because it might sound unbelievable, but median apartment prices have fallen in 19 Sydney suburbs over the past 5 years. A lot of people will find that hard to believe, Nicola.
And some of these falls are double digits. And what that really illustrates is there is no one single unit market in Sydney or in any of our major capital cities. And for me, if you're a buyer out there, it really highlights that you really need to have a deep understanding of what is the suburb or the area that you're purchasing into, what's the pipeline for supply, because we know high levels of supply can change a price point, what's happening in that overall development space, not only just in residential, but also commercial, infrastructure. These can all affect price points, but also, what you're actually buying as well, because you can purchase in a suburb and actually the offering can be quite different just down the road. Like, for example, we know that heritage apartments have a tight following and buyers are willing to pay a premium for a heritage style apartment. And you tend to find that heritage apartments also are larger. They have higher ceilings. So I think it is all about knowing your market.
It's your weekday real estate breakfast with news, interviews and predictions every morning on the Real Estate Podcast.
And I think this analogy, Michelle, is a little like some of these buyer's agents. They don't know. They go in, they talk to these clients, potential clients. They ask them a ton of questions and they're actually being informed by the people that are going to pay them.
Yes, I see that all the time. And to be honest with you, it's a very scary thing for me in this industry because, people are going to think that we are all the same and we are not worth, paying for and sharing our expertise with the clients. So I think as a buyer, it's very important that you do your research up front and understand how long the buyer's agent has been a buyer's agent in that particular area. The quality of properties that they purchase is very, very important. Like, part of my job is to actually help the client walk away from a property that turns out to be subpar because, for example, we found something in the building and pest or in the strata report. And particularly those first home buyers are very vulnerable to that. They buy with their eyes and with their emotion, as opposed to really understanding the rigorous due diligence a property needs to go through and stand up with.
And it's weird that 2030 is only a few years away. What are we going to be talking talking about, I wonder, in 2030, where will we be? Who will we be with? Now, Adelaide, we like to talk about this mature market. It has transitioned from a hot growth phase, is that fair to say, into a more stable, higher priced environment?
Yes, I think so. I think what we're seeing is that we're showing really the hallmarks of a mature housing market now in South Australia, and really the market's grown steadily, and now we've really seen it sort of settled at a higher level.
216 suburbs now record median house prices above the $1 million mark. I know before COVID, hard to imagine we'd be talking about that.
Probably what we're seeing now is a market that's grown steadily, and we're seeing it settling at a high level. And really, I mean, for homeowners, we see it sort of being a really positive outcome because it's equity gains are being retained rather than lost in sharp cycles. So we see values are really being supported by genuine demand.
And because the housing market is set to grow, what is that figure amongst Gen Zs likely to be in 5 years from now? Well over 60%, I'll put that to you. It's a brain drain out of Australia's largest city. It is happening where you are. People in Brisbane going into the regional Queensland areas.
It is happening to some extent from Brisbane into the regions, and it is a phenomenon that we're seeing across all capital city markets. And people are looking for some draw cards of those regions, including more affordable housing and cheaper living costs.
This constrained supply, it does mean that buyers are often competing for limited choices, which is why Brisbane is still recording these price growths and behaving differently to Sydney and Melbourne.
Correct. So over the last month, the first month of January, we saw Brisbane escalate in dwelling values 1.6%. Now, compared to Melbourne, which changed 0.1%, and Sydney, which changed 0.2%, that's a very different price growth momentum.
She now sleeps in tents with her children and relies on charity support. Under current rules and regulations, eligibility would require surviving on less than $18 per person per day, a figure she says is unlivable. I'd have to agree. 7 children living in tents at night. Now, is that the Australia that we know and love?
Good morning, Craig. Thanks for having me. Yes, it is completely outrageous. Surely there is room in the budget to help people like this. It doesn't seem fair. It's shocking, actually.
Talking of streets, Melbourne families are waiting patiently for the next potential rate decision and the prospect of repayments rising to about $104 a month on a $650,000 loan. How are you finding it in terms of your clients wanting to buy property? They're cautiously being probably more prudent, are they?
Yes, they are a little bit more cautious, but I don't believe the potential $24 a week increase in repayments is going to stop many people, including first home buyers, wanting to get into the market. I haven't really seen any people that concerned about the rate increases. Yeah, I'm still getting a lot of inquiry about buying property.
Fully assessed pre-approval, especially for first-home buyers. You know, when it comes to going to auctions, this is very, very important because there are 2 types of pre-approvals, aren't there?
Yes, that's right, Craig. There is the system-generated pre-approval, which essentially is just an application submitted, but it just runs through some very basic checks like credit checks, but nothing's actually assessed against policy. Whereas you've got the fully assessed pre-approval, which is essentially a full application assessed by an actual human, a credit assessor that has checked all income and everything against policy, bank policy. So everything's ticked off up front. When you're buying at auction, it's obviously unconditional, so you don't want to be in the position where your documentation and your income hasn't been fully assessed because it may result in a decline when you go to convert it to formal approval.
And that is a look back on the first quarter of 2026 this morning. Hey, enjoy your Monday, whatever you are up to. Enjoy the week ahead. We will be back with your real estate breakfast tomorrow morning. Catch you then.
We connect you to the best real estate information across Australia. The Real Estate Podcast.